Hey Scott, thank you very much for the intro and getting all the preliminaries squared away. Let me make sure that you guys can hear me okay.
Yeah, I
How
can.
am I sounding?
Pretty good.
Oh,
You sound pretty good to me, Mr. Merkin.
rusty assistant.
What's up, my man? Last day of May. Here we are.
Last day of May, buddy. Guys, everybody in this webinar, Brad has, just so you know, I kind of feel bad for Brad today. He has no earthly idea what's about to happen.
Well, you know, that's the way I like to keep it. Keeps it fresh, right?
All right, I'm going to start with this. Today could be the best one I ever do. It's possible, though, that I say this on every webinar, but I assure you, ladies and gentlemen of the audience, I mean it. Okay, Brad, before we get started, let's remind everyone about the supercalifragilisticexpialidocious disclaimer that is supposed to be written for everybody based on the law. Trade Ideas is not a registered investment advisor. All information that you're going to hear in our presentation from myself, Scott, or Brad should not at all be construed as a way to solicit you buying or selling any securities. That should be done with proper investment advice. Okay, Brad, are we good?
Disclaimer out of the way. Let's rock and roll.
All right, buddy. So, for those of you that don't know me, I'm the handsome gentleman in the ads about there. Brad and I have been doing this forever and a day. I started investing actively in the mid-90s and have been one of the more successful people doing it, I would say, in the United States, because I've been able to parlay that into a successful business of helping people kind of discover not only the freedom that investing allows, but also the incredible fulfillment and lifestyle aspects that can be gained by being able to master this phenomenal possibility that most people don't even kind of understand what's possible. That's one of the exciting things that we get to do at Trade Ideas is every week and every day we showcase through our technology what can actually happen in the stock market. And again, this is just an introduction that you're listening to someone who's made so many mistakes by doing it the hard way, as Brad and I have said before in previous presentations, doing it via bloody noses. Okay, but Brad, before we get started, this is where we really veer off track. Are you ready?
Uh-oh. Okay.
All right, buddy. So before we get started, what I wanted everyone to do is to watch and listen a small segment from TED about mathematics, because what this talks now, I've sent this link in the chat room, and I swear everyone should be able to hear the sound, right, Brad? I can't hear, but everyone else should be able to hear it. Am I correct?
I don't know. Let's give it a shot.
Okay. So everybody listen here. This is about math, and it's only going to go for just a short amount of time, but the idea is that substitute in your mind investing for the word math. Brad, tell me yes or no if you can hear it audibly so that then I'll...
So let's ask another question. What is math? What do we mean when we say we're...
A little bit. We'll give the link out too.
About 4 steps, roughly speaking. Starting with posing the right question. What is it that we want to ask? What is it we're trying to find out?
So Brad, was everybody able to hear the person speaking about posing the right questions?
Yeah, and I think it helped to have him, the text on the screen too.
Yeah, no, well, that's part of why I'm doing this segment. Okay, so I'm just going to let it run now. Okay, everyone listen up. This is important.
And this is the thing most screwed up in the outside world beyond virtually any other part of doing math. People ask the wrong question, and surprisingly enough, they get the wrong answer, but for that reason, it's not for others. So the next thing is take that problem and turn it from a real world problem into a sort of math problem. That's stage 2. Once you've done that, then there's the computation step. Turn it from math into some answer in a mathematical form. And of course, math is very powerful at doing that. And then finally, turn it back to the real world. Did it answer the question? And also verify it, crucial step.
So Brad, that was it really.
Well, it just reminds me, I love math.
Well, it's not so much, I mean, math is good, but I really want everyone to understand that here's a TED Talk that literally goes 1, 2, 3, 4, point for point, that discusses what Trade Ideas does different with our technology than every other vendor in fintech. And I'm going to explain and show you how, but I just wanted you to understand that, number one, posing the right questions, real world verification of what you're doing, the computing to figure it out, and then getting it back to usability. I hear somebody's sound, by the way, Brad, Scott, somebody else.
I don't think it's me, but okay.
Scott, be careful, I hear your sound. Okay, so now, again, we talk about Trade Ideas. The reason that you hear is we're trying to break the mold of what people really think about what is possible in the investing scheme. One of the reasons is because people ask the wrong questions. You know, when you think about, Brad, investing, people immediately say, well, what's an expected return? Whoa, we want to match the indexes or blah, blah, blah. And, you know, well, the PE ratio and the PEG and the forward earnings, I mean, all of a sudden it gets so complicated and weird and ultimately having nothing to do with the thing you were trying to do in the first place. Which, by the way, if you watch that TED thing, and I think it's like 17 minutes, the guy who does Wolfram Alpha, I believe that's his son there, and he kind of breaks it all down, talks about that automation of the computing process does not mean you do not understand it. And so his whole thesis was, Brad, don't get tied up in the complexity, let's say, of the mechanics of integral calculus. You know, the fact of what the thing looks like and where the little a is or where the square root goes, which is intimidating formulaically and can cause people to be like, oh, well, this is not for me. Look at all those letters and I have to know what that means, et cetera, et cetera. Where in the applied world, you're trying to find the area under the curve. You know what I'm saying? It's like,
yeah, for sure.
So, but and this is what you and I and we've discussed this. This is what we're taking to investing. The area under the curve. What can we do to automate something that we know others aren't doing, and how can we make it something that really completely changes the game? That's what we're about here. And one of these innovations we're going to show you today. So our artificial intelligence is, again, that automation, that automating of the process to be disciplined. Okay, so this is the other thing that we've, again, mentioned in previous Q&A webinars, but I want to, but before everyone jumps into the stock picking and four-letter symboling, remember this: all success, all of it. Okay, I'll take it back. Almost all of it, because you can be super lucky, but that's not scalable. Scalable success, repeatable success, is only done one way: through disciplined practice and disciplined behavior. Okay, you have to apply a formulaic approach. You know, think about bodybuilders, or somebody studying for the LSAT, or your finals, or a project at work. You know, if you know it's due, you kind of try to figure out the time you need and hopefully apply it the best way and do it. In investing, we kind of do the opposite, and that's one of the things that we're going to be pointing out. The whole notion of, well, let's mimic the markets, and, well, I'm a buy and hold investor. I mean, that's just complete insanity that's been given to you so that you hand over the control of your money to other people. Now, again, a trade idea is, we're not saying that you shouldn't have money managed by others. We also, myself, Brad, we have money in mutual funds, but we understand and also, of course, manage our own money and look for the very large returns, for the lifestyle change types of returns in the stock market, and those returns are possible. So that's really what I want to kind of highlight here. And now, Brad, before I jump into the next slide, what I want to do is I want to kind of demonstrate something to everyone that people would probably find a little odd that I'm demonstrating. So here is a product called Trading View. I want to make sure everyone is able to see it. Brad, you didn't think this was coming.
No, I didn't.
Okay. By the way, Trading View is a great product of web-based charting. Brad, would you not agree?
Love it. Yeah, for sure.
You can look up any stock. Here's the chart, done very nicely, the graph, and here's where it is now. The problem with this and almost everything else in the financial sphere of tools and technology is not that the charting's bad. They have tons of stuff. I mean, look at all of these tools. Look at all of these complex Greek calculus looking magnet mode. Yeah, magnet mode. How many of you would even conceptualize, by the way, Brad, so just so you know, I have no clue either what magnet mode could be. And it could be, by the way, great. Just me not knowing what it is doesn't mean that it's bad. My point is, though, if you want a scalable investing success, you're going to have to do something else, okay? You're going to be looking through a lot of stocks. And when you look at these stocks, you need information instantly on what to do. Okay? And while charting is available everywhere, that second part of the information of what to do is where Trade Idea comes into play. So let me explain, again, just from the high level, that our whole approach has been the MIT card counting approach, which is identical to the approach that you heard from the gentleman in the TED Talk, which is ask the right question, figure out the answer, automate the computation where it's necessary, and then apply it to real life. The MIT card counting team did that in Vegas and beat the casinos. We are doing that in the stock market. We're the only ones that are doing it in the stock market, and we're giving investors a real chance to beat the stock market in a way they've never imagined before. Of course, one of the ways that we do this is, once again, through the proper education. And proper education does not include specifically you sitting there and learning how to draw Fibonacci lines or something else, or these other wilder lines or this complicated stuff that that often is expected of people. I need you to know how to do the exponential EMA of the 13 period, understand what the crossing of this moving average, convergence, divergence, stochastic RSI thing is. That's going the wrong way. It's the wrong question. So we start with the human element, and a Trade Idea is one of the first things that we provide to help ourselves and our clients. Whether you're a subscriber or not, we have a completely free trading room that is moderated and mentored and monitored by our trading monitor, Barry Anderson. I'm in the room all the time as well. It's an area where it's really not only just, it's a hub for a lot of different things. Education, information where you actually get real ideas and people utilizing our technology, best practices, because you get to see in real life how many different people apply the tech and how that all flows in a communicative flow. Like, how do people react to winning, to losing? How does our moderator able to manage all of this? Seeing the ideas, you will see names that are in play because, again, our room is focused on being on the information stream that's the most cogent to what you need in the stock market. And it is free. That's a very, very important thing, because what we know is it's so difficult from a ramp up to really get the right path. We want to make sure that everyone has an understanding that we can help you see the real market without you paying any fees. You're just seeing it from the Trade Ideas view, which is, by the way, the best view to see it. So that's, again, our start number one, the humanizing the complex data. We also, of course, make it easy for you to trade on our platform through a tool called Brokerage Plus, which is a technology that links trade ideas to Interactive Brokerage. And if you have an account with them, you're basically able to trade directly from the charts or from anywhere else in trade ideas. And this part of the technology, while it's in beta, is free. So this is all still kind of part of the overall intro that Brad and I do pretty much every time we do a Q&A webinar. We also make sure everyone knows that we do a Friday podcast where we often give out different helpful hints on how to use psychology and technology together, and we also try to have a lot of fun. So what I'm going to do is I'm going to minimize my my presentation, and I'm going to load up trade ideas. And Brad, what I want you to tell me if you're able to see my screen, big guy.
I am. I can see your channel bar, 2 charts, and a few trade ideas windows below that.
Okay. Everyone else also able to see my screen? Yeah?
I think they would have to be.
Okay, good, good. So here's the thing. Sorrel Auto Parts. The current price is whatever it is at the moment. You just pulled it up. In fact, it's right here. It's 80, wherever the last tick, 87, 8.75. The part where Trade Ideas takes it to a next level is now whenever you pull up any stock, we give you what would our artificial intelligence put as its stop and profit target if it was in the trade. So although it's not picking any trade for you, you can now look through any trade through the eyes of our AI. In other words, if you got into CBIO right now, the AI would suggest that you not get out till 427 to avoid being whipped out via volatility. And of course, you can also see the profit targets at 563. So it's using mathematics of each stock and volatility. It's not formulaic. Every single one of these smart stops and profit targets is specific to the stock and its volatility. So here you go.
Well, more specifically, it's specific to the stock, its volatility at that time of day for that stock. So, I mean, it takes in all kinds of factors like its stock's relative volume, its range for the day, its average volatility. So a lot of different things it's looking at.
So this is the thing, this is the part where, guys, this is the must-have, ladies and gentlemen. Every single stock you look at, the software assumes you're getting in right now because that should be your vantage point. Where would you get out? Okay, if I got in right now, I'm going to get out right here. Okay, now you have a navigation signpost. Because ultimately what ends up happening in decisions is you ultimately pull up a stock and you get in now. These are the little things about Brad, the questions. You know, asking the right questions that people often just don't quite know how they come together. And one of the things is for your protection of your account so that you can trade another day, you have to have an answer to the question on every single stock that you get into, where do I get out? Okay.
Yeah.
Yeah. So right now, so what you're seeing is a version that I have that even Brad does not have yet. But it's going to be out very shortly. And this is, again, the thing that we believe is one of the most critical pieces of innovation. Now, there was a question whether it's long or short. Right now, it's long only because, again, for the short, we're building some of the logic for the stops a little bit differently. Because, again, a short behavior and a long behavior are not the same kinds of behaviors. And so, and because, again, the majority of the public being net long, it's a good way to start. So the other exciting thing for everybody here is that this part of the technology is going to be part of not only the premium version. It's going to be available to everyone because we feel like it's so critical that everyone must have this information no matter what stock you look at. Whether it's Twitter, and here again, this is, if you're in right now, your stop is, very close. The software would not want you to hold this a long time. Or your favorite Apple. There's your stop. Or Amazon. Whoops. Or Netflix. Brad, I really think we kind of jumped into a new level here, because there's something that I really love about what we're doing, and I want kind of to communicate why I feel like it's so critical, and then I want to jump right into asking some of the questions and how we answer them to really tie it all up, so to speak. And Brad, by the way, will you do me a favor? Will you resend me that cloud link that you had sent me before?
Yeah, you bet.
Yeah, because I got it screwed up a little bit. So Debbie, yes, it's the same stop. The stops are visible. The stops are visible in the same price, but just different charts. But the price is the same. So Paul, so I have a version that again, even Brad's not allowed to have because I'm so powerful and omnipotent. But as soon as Brad gets it and some of the other people get it, we're kind of really focused on the visual implementation of this. So you're really seeing kind of cookie dough. Like, notice you can read the word smart stop, but it hasn't been kind of highlighted yet in profit target. We're also going to add a little bit of shading here and there. But the idea is that you won't have to do a bunch of configuration to see this data. That's the real key. So the other question from Billy over here is, the smart stop heavily weighted to price action or a proprietary measure that you guys have calculated? Billy, it's both, because you have to use the current price action as a descriptive point of what's happening, like the volatility, the volume, the range, all of these things. But then, of course, we use our own custom data to add to it to make it what we believe is smarter. Is this intraday? Don, so every trade is intraday. When people say, well, I'm getting into this to hold it long term, well, then you're already kind of posing that bad question to begin with. The way you stay in something long term is if you get in, you don't lose money in it, and it goes your way and you're able to stay in it. But if you get into it and you're not prepared to get out of it, well, then you can be in it for a very, 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 very long time. So the stops are the proper decision-making stop for this point in time, meaning that you ought not potentially be in it to avoid further losses. And we're going to showcase what that means when Brad and I show you what this looks like on the AI. So, Brad, are we caught up on the questions?
Yeah, I think we're caught up.
Okay, very good. So one of the other things that I want to show you guys that we recently just added, and it's something that everyone's been asking for, is this page, which is people ask us, what makes up your artificial intelligence? And, we've kind of slowly been adding the documentation, and now we have this page. And I will paste it into the Q&A so you guys have it, so you can, on your own, read what makes up the artificial intelligence. Cheryl, yes, the AI absolutely takes into consideration what the overall market's doing. All algorithms look not only event-specific, but they also look market specifically also. Like, for example, if the S&P futures are, falling rapidly and there's a strategy that's looking to optimize, pick, downward moves to buy, it will avoid doing that because it doesn't want to stand in the way of, a freight train. So again, simplicity beats complication. Notice, everyone, any stock you are in, you have a way to see what you need to do. And this part, again, is available not only oh, Brad, look, it's that thing that I got something from before.
I think I sent you the cloud link, did I not?
I did, but it said it was unrecognizable. Why is
Well,
it?
because you copied some URL from something else.
Okay. Let me try that again. Ah, yes.
There you go, my man.
Why did you give me all of them?
Well, because those are the different iterations, right? So the first one just has a couple different filters, and then through the whole process.
Okay. So thank you. So guys, remember we were talking about questions. Okay. So Brad had said, in order for trade ideas to help you and in order for you to be a good investor, we have to ask the right question. Okay. And so let me tell you what the right question is, and you can either argue, agree, or disagree, but the right action to succeed as a investor, an active investor, is to basically, in my scientific calculator opinion, is to be able to say, do stocks exhibit behavioral patterns that repeat? It's kind of a general question because, you know, you can get very specific, you know, are there patterns? Are there, you know, does this look like this? And then there's what is a pattern, etc. But at the very high level of definition, is there behavior in the stock market that is repeatable? That's what we ask. So how do we know if it is or isn't repeatable? Well, the only way to know is to be able to kind of place some bets, see if your hypothesis works, and see what happens. So for example, Brad had this idea that stocks like this, like Gush, and I guess this is the ETF for oil and gas exploration, Gush. I'm like Gush. I can't read English, Brad. That this could possibly be a good time to buy. You know, consider this. As investors, we talk about you're given so much bad information, like for example, information that says don't buy lows because lows can't be found. Well, again, who is telling you this stuff? The whole interaction of the supply and demand curve is very wave-like and fluid. And what you're trying to do is you're trying to basically understand, is there a pattern here? And your eyes already tell you that there is. What you're trying to figure out, okay, well, I can kind of see it's definitely moving lower. Here's the pattern. From here to here, it was moving lower. So that pattern has continued from here to here, and then also continued from here to here. So there is a pattern. But in this particular case, Brad was looking for the question of, well, can these kind of pullbacks be bought? And so we built our own technology to ask these questions, and we can say, okay, I'm going to simulate every time this happens, I'm going to buy, and what happens? And here you can see we're going through our data center, and we're doing massive automated calculations to figure out, is this a good idea? And the computer says, damn, Brad, this is not a good idea. We went through 5,000 things, and it's basically a coin flip with the winner being just a little bit better. Okay, so now we know something. Very good. So then we ask our software in the data center via computers, we say, hey, well, can you give us some help? Can you look at all these combinations of filters and data and see, is there behavior in this that is something that as a human I could act upon and potentially be rewarded? So it's a rewards-based system. I'm rewarded by acting upon something that I can anticipate. Okay. So let me, so the computer comes back to us and it gives us a window like this, which, by the way, I will provide to you today as a gift for everybody for attending this webinar. So after the computer goes through the millions of combinations of things, okay, we retest it and we see that, as it turns out, the computer can see things that we can't. It just has an ability to find information, and again, through brute force number crunching, that would be impossible for somebody to do by hand. Going back to the calculus lesson that we talked about in the beginning. This, ladies and gentlemen, is the advantage that Trade Ideas brings to the table. This data, these signals, the computer filling in this information automatically for us, using our own proprietary back-end data and technology. Okay? And then it reconfigures everything and gives us the signals. So once we did this, we can also then say, well, how would we have done today, for example? Okay, so this system that I tested, the hypothesis, you don't trade till 7 in the morning, West Coast time. So we ignore the volatility of the first 30 minutes. I had not done that here. So what I'm going to do is I'm going to right click and I'm going to go to my search tab and just simply add time. We don't allow the AI to change the times of the strategies. That's done for, again, at the execution level and at the AI level, but not on this optimization level. You do that, it's all done again automatically, but not as I'm showing you here. So here, to match the strategy exactly, I simply put 30 right here, so ignore the first 30 minutes, and now I'm showing you what the system would have shown you today. So I like the pullback. System would have had 2 trades today.
Yeah, I don't know that actually those would have made it either. Run that, pull up the back test again.
Why wouldn't they?
Well, look at the time we're ending, right? So we're ending at 11:30.
Okay, so would have not had any trades today, but we can still see out of sample data, like how would it have done? And this is going back to the 26th. Let me say history today. So notice, by the way, you have a lot of opportunities to just, customize the view however you like it. You can go back, you can go more time frames, use calendars, lots of power. But just from here, the entry was 115.21. You're just a little bit higher, 115.51, and this one 91.35, and that turned out to be a decent one too. Again, there was no way.
The interesting thing here, and kind of to what Cheryl was asking earlier about whether the AI and the software in general really looks to the broader market. I know that there are some market filters in here, and it was probably a good thing that it didn't put those trades off, because that market was pulling back a good portion, and it just didn't. It found it a little bit too volatile.
So here, like for example, to act, it wants a maximum Dow change of a certain amount, from on a 10-minute scale, on a complete scale, a minimum. So it's looking for a very specific behavioral range and percentages that, again, you would not be able to replicate. But the beauty is you don't need to, because we automated that and you will get the results. So what I'm going to do now is, well, first of all, I'm going to see, okay, CHPG, I'll just go here real quick, but I'm going to right click. I'm going to save and share to the cloud. So here, everybody who is looking for the strategy, as a gift to all the attendees, this is a cloud link for this strategy, which is done by our AI, and this is, again, us showing you the 1, 2, 3, how we answer the questions. The question in this particular case is, if you look at the exit, is where will this stock be 90 minutes from the entry. And what we found is on average 70 cents higher. That's pretty good. That's what we're looking for. And that is what you guys just got. Okay. I'm going to move this out of the way here. So CHGG, Holly would be exiting at 11.74, and the profit target would be at 12.51. Okay. So, Brad, as I noticed what Ron was asking, guys, here's the thing. Everything that you can think of in terms of what we can and cannot do on any time frame, we do. And I'm saying this not to be boasting, but I'm just simply saying, imagine that you're a company like ours. We're trying to put the best signals out there possible. So we are investigating every concept that you can possibly imagine. And that's why we know that traditional technical analysis by itself does not work. It only works as one input. But what we do is, whether it's the 30-day, the 20-day, the 50-day, the 5-minute, 1-minute, 2-minute, we're constantly comparing and contrasting. Okay? We're constantly changing assumptions and just basically using the brute force of our data center to find where the behavior is repeatable. That's as simple as I can say it. Brad, do you remember the trade of the week email? I don't remember the specifics on that one, but again, remember what I'm giving you, Cheryl. So from Holly's point of view, okay, she assumes you're in CHGG, and if you're in it, then right now the stop is at 11.75 and your profit target is 12.55. So that's how she would have adjusted it based on the current price level if she was in. Brad, I'm not sure I know what Ron's saying, so this is a one-button filter.
Let me read that. Yeah, I don't understand that either.
Okay, any other questions before we move on to other topics? So, Ron, again, one of the ways that, we look at, let me say, new top list window, for example, start from scratch. So you're talking about, like, let's say 30-day intraday pattern filter. So we have this thing called position in range, and it's a tool that we use to really be able to isolate anything. And position in 20-day range, it's 20 trading days, which is basically your month, roughly speaking. So you can say, okay, show me every stock that's at 100% of its 20-day trading range. Make sure that it's up 0.5% today, and the volume today was at least 200,000. Okay, I'm going to call this for Ron. Okay. So here you are. That's kind of what they look like. And, I didn't really put any price constraints, but roughly speaking, now you can, of course, add a bunch of columns to make it have more sense. So what I can do is I can say, okay, search, I can add show column of the price, average daily volume, the relative volume, say stroke columns. And so now you can kind of see what's going on. You can then additionally, you can filter the information even more if you like. You can say, for example, relative volume and social activity. So here I can take something like this and say, show me where the social activity is 300% of normal, and at the same time, the price, let's say, is a minimum of $5 and a maximum of $80. So you can get very specific, okay? And then now you've got a very specific list of stocks that are all very bullish, and instantly notice the beauty of what, now Ron's hypotheses, okay, all have a guidepost. So every stock you see, and again, I'm not saying that you're bullish, but if you are, if you're getting into DCI, here's your exit. You get the ERIC, Ericsson, here's your smart exit. This is the signpost. Here's your smart exit. Here's your smart profit target. This is what you need. There is nothing else out there that's going to give you this information this way in an automated fashion, where every single one of the data points is specifically stock adjusted, not just some cents number or some percent number. And this is what makes our technology better than everybody else. I don't want to front, Brad.
Well, you're not bashful.
Well, not about this stuff. This stuff is really, really good. This is what you need. Okay. Visible signposts. That's what we need as investors, so that you can apply the knowledge of price action to real-time active investing. Think about that again, tying it all the way back to what we started with. Ask the right questions, which is, where will this stock be in the future? Find what works through the testing that I was showing you, that back testing component, and then automate it all. And that's what we do with our AI. Okay, so I'm switching channels. And by the way, this is the other part where you have to also really kind of be aware of something. Today was a day where in risk on mode, of course, the AI was not profitable, which happens. It was a light volume trading day, but the market was incredibly erratic. Okay, it had this huge down move, up move, down move, up move, down move, up move. These things also happen, and again, that is why every single thing that you see has, with trade ideas, has clear entries, exits, and profit targets. So look, for example, this one, SIG, okay? And I'm going to zoom in a little bit here. Okay, so you talk about, why do we put the stops in? Okay, we put the stops in because the computer calculated the area and says, listen, I'm willing to risk some, but beyond this, you got some problems. And then we go back to the simple word that we talked about before in the very, very beginning of the presentation in that thing, which is discipline. We are visually creating discipline. This was a short, by the way. So we had a short here, no fear, short here. Well, you don't, look, Brad, you know what? I'm going to explain something. There's a play on words here,
There is.
Aha! Got Williams.
He got me.
Yes, Brad. As your buddy, who is the poet behind some of these names, there is a triple to quadruple double entendre.
Oh boy. Okay,
No
hard to
fear
keep up
short,
with that.
No fear short here. The no fear comes from the fact that we know where to get out, not because we are going to be right. Now you get it, don't you, Brad?
Well, I do get it, of course.
Brad before had just a false sense of confidence because he thought that we had no fear because we're always right. But we are astute investors, and we know that there's no such thing.
Well, I know that we're not always right, but this is a really good example, right, of the call. It happened pretty early in the morning, a lot of volatility in this stock, and we were stopped out pretty quickly, like on the next bar. So it was a pretty quick trade right there, but the reality is it spotted something, and this is the thing that everybody needs to understand. Timing is not perfect, and the stock market is very dynamic, but it really did spot a footprint that led to a really significant decline.
Well, at the height of the profit on this trade in risk-on mode, and risk-on mode was all over the place, so we wouldn't expect everybody to get in it, but some people did. You had almost over a point, no, it was more than a point in profits. Because remember, we got in right here at this area. It went against, but then it went right for 5, 10, 15, and on the 20th minute is when it retraced back to the entry. But it looked like it really
treated that entry point as a pivot through the day, as an area of support, resistance. It really, kept that price point as a very interesting area.
Well, it's a beautiful example, again, of what we're trying to do visually. We're trying to help you see the big picture. And the other thing that we're also pointing out is this. The AI is always looking beyond the simple day. Okay? People always ask us the question, is this for day trading? And the answer is, well, no, of course not. Because the idea is if you're in something and you're making money, why do you necessarily need to get out? That's an answer you should really ask yourself, because when you're in it, it can continue to go up. If you're out of it, it surely will not go up. Wayne Gretzky had one of the best quotes in sports when he said, "I did not score any of the goals I did not take." So to score goals in the stock market, you have to take risk. Take risk means being in the market, not stupidly, but if you want to have any of the gains, you should be in the market. Whether you hold something overnight or not is simply a function of your risk, the account size and what you're willing to withstand. Somebody with a $100,000 account who's trading size appropriate, who's telling you that he can't afford the overnight risk of a 500 shares of NEOS is, well, not mentally fit to be an investor. It's that simple. So we are visually trying to change the game so that you understand how things work in a better way and also have the proper risk management. We tell you which way to go. It switches on in real time so you know what to be in or not to be in. And finally, visually, confirmed. So this was one of our few, Brad. I mean, this year we've had very few down days, and this is one of them. I doubt that there will be too many in a row, but there could be. But in terms of...
Go ahead and click on the risk on profit and turn it into a risk off mode so we can kind of see what that looked like. So that, this mode right here is adhering to the stops, the time stops, the stops being hit, reducing the risk, as well as the profit save. So this is the more conservative approach. And, even though it was a down day, it wasn't that bad.
Right. But I want people to know that do not be afraid of, you're only afraid of down days if you have no preparation behaviorally to accept the risk. That's it.
Yep.
And again, you holding profits or not holding profits, overnight or not overnight, is not an emotional decision. It is a risk-based decision on what you're comfortable with, and your emotions could play into that, no question. But it really should be a risk-based factor. So, of course, again, for those of you that don't know, we have a full channel bar that gives you the ability to stream this information. Our trading moderator's favorite windows right here, the surge channel, incredible. I mean, you cannot miss any of the big ones. If you just watch the surge channel and you don't have a lot of experience, you cannot miss any of the things that are really going because it's specifically designed for that. But now, as soon as you're in, Brad, look, signposts, restroom around corner, food, 2 miles, next exit. The more I see this, the more I'm in love with this. Joe, great question, and we will start having Brokerage Plus webinars, specifically Brokerage Plus webinars, very shortly. We're kind of preparing. Right now, you've got a lot of videos on our YouTube channel about that, but we're going to get there. All of this is starting to kind of come together and integrate, where Brokerage Plus and how you view stocks in Brokerage Plus will soon be almost kind of analogous to how you view the AI and eventually how you paper trade as we take over all of FinTech. You guys are just awesome because you're here first and you get to see the company that will eventually dominate every aspect of it. So on that note, Brad, I'm going to jump right back into our wonderful PowerPoint. And what I will do is go into present mode. And as we finish up, what I'm going to talk about is what are the different things that we offer to various clients. So we have two basic modes of trade ideas, the standard mode and the premium mode. The standard mode, incredibly powerful. You get huge benefits, including that feature that I just showed you where you get the smart stop and smart profit target. What you do not get access to in the standard version is that artificial intelligence, the back testing, and the proprietary price alert notifications that we have. That is all available in the premium version, which is all of the basics, including the stuff that I just showed you. And it's $188 a month or $1,888 per year. And there's a promo code, sessions in all caps, that gives you 15% off the first month or year of trade ideas. Excuse me. Let me just give this to you in perspective. So somebody yelled at me, Brad, and said that my math is wrong. But
well, you know, it was Barry that yelled at me, so it was just kind of like flowing through.
Passes downhill. So this is what all this technology that I just showed you, what it costs per day. And here's some various relativity points. Medical school, it's cost you $137 a day. You got to learn how to cut people, save their lives, and then you got to get a job after. There is no better time to be an individual investor in the stock market because we are back in this area where individuals have access to information that institutions even do not have access to, because institutions they all want to manage the money, but they don't want to work to find the ideas. And what we're doing here with Trade Ideas is we're the cowboys in the data mining frontier. It's an exciting time to speculate. If you have discretionary funds, the kind of moves that we see, the stocks that are out there, this is as good as it's been in over 15 years. We're very easy to get a hold of, especially Brad. Let me give you his address and picture and Google Plus. Our Twitter, my Twitter, is @TradeIdeas1, and our corporate account is @TradeIdeas. It's much more boring than I am, but with mine you can be easily offended, as most people on this webinar often are in the end. Please like us on Facebook, facebook.com/TradeIdeasPro. We are available by email and phone number. And the other thing is that whenever you subscribe to Trade Ideas, you get a free one-on-one trading center with one of our educational superstars who are experienced investors, still invest, and also work for Trade Ideas. We hire people who use our technology. That's one of the coolest ways that we run the business. We've crowdsourced our employees through people who've decided they love the product so much they want to work for us. And we still do that to an extent. So thank you, everyone. Scott, did I miss anything, or are we all good?
I think we're all good. Just another reminder that the webinar is recorded, so we'll get the replay up later tonight. You get a reminder tomorrow. Stay tuned for an invite to tomorrow's trading studio session, same time, same place. You'll get an invite probably in about 20 minutes or so. So sign up for that. And then we've got a new support session going on Fridays starting in the morning, so you get an invite for that as well. And it's a 3-hour session, I believe at 11 a.m. Eastern to 2 p.m. Eastern, 8 a.m. Pacific to 11 a.m. Pacific. And that's just an open forum. Come to that room on Fridays. It's kind of like Barry's Trading Room, except it's in GoToWebinar, and it's just for support questions. So pop in, and we'll have a couple of our educators there. I think Steve, Andy, and Jamie are going to take turns, or at some point I'll be there at the same time. You might see Dan and Brad there as well. So thanks, everyone. Thanks, Brad. Thanks, Dan.
Thank you, Scott. Again, guys, big stuff in the pipe. This is the time. This is the trade ideas time. Do it.
Thanks, everyone.
Take care.
Good night.
Bye.